Lots to go over here. I want to spend maybe about 5-10 minutes going over one slide with you, one page, just to make sure we're all on the same page with what we're going to be doing. Kind of a little lesson, and then spend the rest of the time applying that to the live markets. Okay? So we are talking about swing trading, the Forex market, one of my favorite things to do. And let's get started. So let me share this with you here in just a second. You know, how these markets really work. What happens is most people that dive into Forex trading, they go right into strategies, and they'll look for the hottest strategy out there, and and go with that. They just dive right into strategies. What happens is a lot of times they'll end up putting a lot of indicators and oscillators on the chart. They'll be really deeply involved in the news and fundamentals and things like that. We have to be very careful with that. The problem is the vast majority of people that dive into trading anything don't take the time, and it doesn't take a lot of time, don't take the time to really think about how the Forex markets really work. What is really responsible for the movement of price in these markets. Okay, so we're going to go over that for just about 5 minutes here. Okay. If anybody has any questions to the concept and logic that we're talking about, certainly ask them, and then we'll go apply this stuff into the live markets and find some opportunities. All right? So the goal with anything is to attain low risk, high reward, and high probability entries into markets, right? Okay. I think everybody, that's what everybody wants to do, right? That's how we get our low risk, high reward return. Okay. We're all looking for a good return. So how do you get that low risk, high reward entry? Well, in my opinion, there's only one way. Okay? You have to identify the turn in price in markets, right? You have to identify price levels where markets are going to turn. Okay? I don't think anybody will question that. You can if you want to. But so the goal is, how do we identify market turning points? Because the closer we can enter a position, to our protective stop, which is our risk, right? The bigger the position size we could put on and still have a small amount of money at risk. That's the goal, okay? That's our goal. That's the goal of the market maker, the bank dealer. That's what everybody wants, okay? Whoever can enter the position, closer to that turn in price, that's who's going to make all the money, all right? So let's work backwards. How and why do prices turn in a market? Well, think about it. Think about any market you could possibly think of out there. Okay? Prices turn at price levels where supply and demand are out of balance, right? Okay. If you understand that, you'll understand that the most significant turns in price happen at price levels where supply and demand are most out of balance. Okay? So now I started my career on the floor of the Chicago Mercantile Exchange, actually in the currency quadrant, right, upstairs at the Merc on the currency floor, handling institutional order flow. Banks, institutions, money managers, big funds, things like that. Okay. And what I realized right away was this whole game was just an ongoing supply and demand equation, right? In front of me, I had orders, buy orders and sell orders, okay? Prices would move back and forth from real demand, buy orders, to real supply, to sell orders, okay? It would just move back and forth again until one of those stacks of orders was gone, and price would then move to the next stack. This was all just motion into mass being the order flow. So take a look at the chart here. I'm going to capture this one more time for you. So a few more people entered the room here. I'll make sure everybody can see. Okay. So you may be thinking, great, I understand what you're saying, makes sense. But maybe you're never going to be a bank dealer, and maybe you're never going to be on the floor of an exchange. Well, that's good. You don't want to be either of those two things. I would argue that if you understand how to see this, see real supply and demand on the price charts, that the person looking at the chart has a big advantage over the bank dealer or market maker. I know you may think I'm crazy, but just hear me out and you'll see what I'm getting at. Okay? Because I've been on that side. I think the person looking at the chart has the bigger advantage. Okay? Okay. Okay. Yeah, so Bill, it all depends on your definition of what a supply and demand level is. Okay? There are many potential market turning points on a chart. There are plenty of supply and demand levels, but we certainly don't want to take all of them, right? In fact, we're going to end up putting our hard-earned money at risk on very few of those levels. Only the levels that meet our minimum requirements. We're going to go over that in a few minutes when we get to the live markets, okay? Because once we go through this, well, let me take you through this, and then I'll move on. So focus on this level right here. Can everybody see the area I'm pointing at? Everybody see this level up here? Okay. Yeah, okay, great. So understand prices trading sideways there. Okay, right here. Whoops, there we go. Prices trading sideways here. Supply and demand appears to be in balance. Understand that the only thing that can cause price to drop here, right? Why did prices have to decline from this level? Is because at the origin of that drop, supply greatly exceeds demand. There's a supply and demand imbalance up there, right? Okay. Now we could look at news and follow some indicators and oscillators, but none of that's going to help us. If anything, that's going to hurt us. Instead, understand that prices have to drop from this level because at the origin of that drop, supply exceeds demand. There's more willing supply than demand. So what we do is we wrap a couple lines around this level, okay, and carry this level forward, right? This is like a supply level or sell zone. Right? We want to identify where that real supply and demand is. Down at the bottom, price is trading sideways, okay? And then all of a sudden there's a strong rally in price, right? Again, why did this strong rally happen? Because it had to. Because at the origin of that rally, while supply and demand appeared to be in balance here, the truth is there was never balance. It was always out of balance. It just took a certain period of time for that unbalanced equation to play out. And at the end of the day, once this rally happens, that's when we could say, aha, demand greatly exceeds supply down here at the origin of that rally. So we wrap a couple lines around that level and again, carry that level forward, right? And what we're doing there is potentially identifying two potential market turning points, okay? All right. Yeah, so again, let's see. Yeah, so let me walk through some of this, and I think you'll see. One of the things now here's one thing you have to understand. Let me kind of read back. All right. Let's see. Yeah, so let me answer a couple of these questions. So again, these free webinars at FX Street. What I try to do is give the best education possible. I really do try to help as much as I can. I don't get paid for doing these or anything, but what I'm getting at is, inside of our XLT program, an online trading academy, we have now thousands of students in there, and there are little things that I try to go over as deep as possible here with you, but certain things that I'm going to get to today, I'm going to get to a little bit of those things today. But for example, some people read the free articles at OTA, and I think they're good and helpful, but we could never go into some of the finer details because I would get hate mail from people that are actually in the program. So trying to say that in the best way possible. Hopefully you understand. But we're going to go over some of those kind of key edge building things that levels that someone in our program would take versus levels that we wouldn't. They're subtle things. They're nothing complicated, but we're going to go over some of that today, okay? So I think you'll see the difference between a quality level and a level that's not that quality, all right? And let me see. Yeah, so Arju, I see your question there. I am not suggesting at all that, let's say we're looking at a weekly chart and prices are coming into a level. I'm not suggesting at all that it's the same buyers or sellers that are sitting there. I'm not saying that they still have their orders there. I don't think that at all. I'd be shocked if it's the same people's orders, and it's probably not. But what we're saying is that chart represents the aggregate supply and demand in that market. Okay, that is those areas are the last price levels where there was more willing supply than demand, but I don't think for a second that it's the same people's orders. Okay. And, Bill, yeah, we're going to get to some, let's get to the live market, all right? And you'll see what we're talking about. Okay. All right. Yeah. So again, I always walk that, and hopefully you understand. I don't know if I said it the right way, but I really do hope you understand that I'm always walking this fine line between trying to give the best possible education, but also too, I don't want arrows flying at me from people that are actually in the program. So it's a very tough fine line to walk. So let's dive into some of that stuff though. So now that's step one, right? Identifying your potential market turning points. Step number two, really focus, and Bill, this is something you want to do too. Really focus on who is on the other side of your trade. Okay? Now watch. When prices come up to this level right here, right? Understand that someone's buying after a rally in price. Mistake number one, buying right into a price level where supply exceeds demand. Mistake number two, okay? We want to make sure that we sell to those novice buyers. So in other words, when you make a trade, don't just push the button because the setup looks right. Make sure that you run through the simple logic and determine that you are trading with a novice market speculator. Same thing on the bottom here. When prices drop, make sure that you're buying from someone who's selling after a drop in price right into a price level where demand exceeds supply. Okay? Those are the two things that you need to focus on. Identifying market turning points, number one. Number two, making sure that you are trading with novice market speculators, people that are consistently making those same two mistakes. Okay? All right? Now, let's take this a step further. So everybody pay close attention here, and then we'll get into the live markets. So how do you determine? So you have all these supply levels and all these demand levels on charts. How do you decide which ones to take and which ones not to take, right? Because prices always ultimately turn it at the levels, but which ones are you going to take? How do you do that, right? So there's a number of things. Number one, how did prices leave the level? Make sure, okay, that there was a strong move away from the level. Okay? Remember, prices can move away from these levels in one of three ways. It can be a gradual move away from the level. Okay? It can be a stronger move away from the level, maybe like this, or prices can move away maybe with a gap. Okay? Remember, it's the gap or this picture right here that represents the stronger prices move away from the level, the more out of balance supply and demand is at the origin of that move. Okay? So that's a big one. Okay? The two things that you need to focus on, that's probably, that one's a big one, how prices moved away from the level. So, in other words, unless prices move away from area in strong fashion, okay, I wouldn't even consider that a level, because it's not a level I would take, so I wouldn't even call it a level. You see what I'm saying? Now, the second one that is just as important, if not more important, is knowing where you're at on the larger time frame supply-demand curve, okay? Because you could have the most perfect-looking demand level, for example, on a hourly chart, whatever, 4-hour chart, whatever, 5-minute chart, it doesn't matter. You can have the perfect-looking demand level, nice, nice strong move away from that demand level and everything. But what if in the larger time frame you're much closer to larger time frame supply than you are larger time frame demand? Well, then that level's probably not going to work, right? So knowing where you're at in the big picture, I see Jason's kind of pointing that out here. Okay. Yeah, those are the ones, knowing where you're at in the big picture is key, right? So if you, and in fact, if you are, near that larger time frame demand, you could take levels that aren't even that nice and they're probably going to work out. We'll look at the Aussie in a few minutes against the US dollar. Well, you'll see that in a larger time frame, you're way up there near larger time frame supply. I know the last few sessions we've had here, we've been looking at that Aussie. And if you've seen, all those levels we're finding, those supply levels, some of them aren't even that pretty, but they're working out fine just because we're so well placed in the big picture. All right? All right, so let's go out to the live market here. Let me share that with you just a second. Okay, there we go. Okay. Here we go. Yeah, Jose, I hear you there. Yeah, so again, I try to do my best. You know, it's a fine line. All right, let's. But you know what? I'm telling you, everything we're going over today, the answers are here. If you really follow and stick to what we're saying, keeping it very simple, right? There are 5 or 6 different key odds enhancers that we look at in the program. But two of the most important ones are how prices moved away from the level, where you're at in the bigger time frame. That's so important. Okay? So let's take a look at this monthly chart. Everybody should see the charts now. I have them up. Okay? So I've got this monthly Aussie chart. I'm just going to pull it up here. And I'm going to put some levels in so you can see. All right. All right. And I'll grab the chart again because I don't. There you go. Okay, so we're much closer to larger time frame supply than we are to demand. It's pretty clear there in the Aussie, so let's see. All right. Yeah, there you go, Nick. Good advice there. All right. So here we go. So there's the monthly chart of the Aussie, all right, near larger time frame supply. So now let's work our way down and try to find some levels to hopefully sell off of, right? Some supply levels, some key supply levels we want to find. So I'm going to come down to a smaller time frame. Let me pull that chart up for you. Okay. And here we go. Okay, so let's see right here. Yeah, Jack, what we do is we go inside that spike. And we'll find some the origin of that turn in price. Okay. All right. So let's take a look at this chart. So you should be looking at an hourly chart of the Aussie. So we look at current price here. We've got a nice rally underway. Okay. Now you might be looking at this, and now let me circle a level here. Okay. And then let me take you back to. Oh, don't worry. I'll capture the chart again. There we go. All right, so you may be looking at this and saying, well, you know, price just came up to this level to the left, right? You should be able to see where I'm pointing. So price recently just came up to this area, base sideways. You know, why didn't it turn lower? How come it didn't, you know, someone might look at that, Bill or anybody might look at that and say, well, you know, why didn't price turn lower there? Okay. Right, so, you know, why didn't that level work? Well, again, you have to stick to the rules, okay? One of the other odds enhancers that we talk about is time at the level. How many times did price come back to the level? So here's the origin of the drop over here at the left, and notice the strong drop in price, right? Okay, the strong drop in price right here. So this is the origin of the drop, and we'll find a nice level going forward here in just a minute. Okay. So there's the origin of that drop. Nice and strong. Also, is it well placed in the larger time frame, right? With regard to the larger time frame supply-demand curve, how does this level look? Well, we already know it looks good. We saw the monthly chart. It's way up there, right? Near that level. Okay? So, rally-based drop, supply, strong move away from the level. Notice the first pullback turns into a huge trade. The next pullback, another decent trade. But remember, one of the things we look at is understanding that every time you come back to one of these levels, think of the trading floor example. Every time you come back to one of those big stacks of supply, you are eating away at the supply, right? Okay? Which means some of that supply is being used up, which means, you know, it's losing its power. Okay? So you would never, yeah, someone's pointing out fourth revisit there, Vorbis. Yeah, third or fourth revisit there. You would never want to enter this trade now. In fact, we would probably expect prices to go through this level. Okay? So now, where's the next level above? Okay? Daniel, it dropped hard last time, but certainly, as far as profit margin goes, there was no profit margin with this. Okay? So what Daniel's suggesting there, I think, and correct me if I'm wrong, is that what about this new little level right here? Like, how come this thing, you know, if you carry that forward, how come when prices drop from here, you know, there wasn't a good trade in here? Let me see if I can. Okay. I think the question was, how come this level, here's a new level, strong drop, how come it didn't, how come this didn't work out? Well, we would never take this trade because there's no profit margin here. Remember, prices have to go at least 3 times the size of this level. That's how we know a nice significant profit margin has opened up. Okay? All right? So now, let's find a new level going forward. So where would the next potential turning point be? Because this level's used up. It's done. I'm just going to move this box right up to the next area above. Let's put our lines up here. Okay. And I'll capture this chart again if you can't see it. Just a second. Everybody should be able to see that. Yeah, so that I saw a question just came in about a minute ago. Yeah, so that new level, prices moved away from there, in kind of strong fashion, but again, prices didn't move far enough away to tell us objectively that we had a significant profit margin. But now we've got this new level above, right? Kind of rally, facing, strong drop. Prices have not been back to this level since they left this level. This one is well placed on the curve as well. In fact, this one's probably even a little bit better, right? And again, the topic today is swing trading. I saw someone put a post in there about the charts last session, and that was strictly day trading. That's why we're looking at tiny time frames, really small time frames. Okay. Here, let me grab the chart for you again. Okay. Peter, it is similar to the one beside it. However, this one, prices moved far enough away from this level to still call it a decent level. Remember, there have not been retracements to this level. Okay? So we have not, the level that I'm focused on, since prices left that level, they have not been back there. Okay? And understand that prices move far enough away from that level to suggest that there's a significant profit margin. Okay? Now, we do have some little demand speed bumps on the way up, which are, I'm going to put some lines in here. Okay, there's one, and I'll capture the chart again. Okay. There we go. All right, let me capture the chart. Okay, so you should be able to see that. So those black lines I drew in there, if prices come up to our supply level and fall, those are areas where, some people might consider some profit taking. Those are probably going to be little kind of demand speed bumps on the way up. But, you may want to ignore that first one, go with the second one. It all depends on what your trading plan says. So, but another thing I can tell you is the most successful people in our program that do this have a very specific set of rules for doing this. In other words, they'll only take a level if it offers at least a 3-to-1 profit margin to the first target. Got to be well placed on the curve. There has to be a strong move away from the level. That's the key. Other than that, there are a few other things, but the key thing is, in your trading plan, make sure you clearly define what a level is to you. And it has to be deeper than just the picture and the pattern. That's kind of the theme of what I started with today is, it can't just be just simply a picture or a pattern. It's got to be more than that, right? You've got to, what we're attempting to do here is really quantify and qualify these levels of supply and demand, right? So when I started on the floor of the exchange, I could clearly see the price levels where you had a huge stack of buy orders, for example, and other levels where, you had a kind of a small stack of buy orders, right? Well, unless you're on a trading floor, how are you going to know that? By looking at a chart. Well, these are some of the things that we go into, right? Big picture curve, all that stuff. So, okay. Jason, yeah, that is a revisit to the level to the left. And this could be the 10th visit to a level to the left. It doesn't matter. The whole point is, since prices left this level, Okay, look at how far down they've gone. There was a big drop, and now we're just approaching. We're just coming back to this level now. Okay, so and if we hit this level and drop a few hundred points, we'll take it again. Okay, that's the beauty of this. The chart will tell us when to stop selling short at that level, just like the one below. The one below was great that we used, but that last time just fell from that level on 211 or 212, because prices didn't fall that much before coming back. That's what told us, what? Objectively, there's no profit margin here. Now it's time to start ignoring that level and go up to the next one. It's very mechanical. You have to know the sequence. That's the whole key. All right? And once you know the sequence, it gets much easier. Okay? All right, let's move on. So that's the Aussie. And again, why are we only looking for shorts there in the Aussie? What's the reason? It's almost got to be like a switch that gets turned on. What's the reason that we're only looking for a short there in the Aussie? Yeah, higher time frame supply, exactly, Morvis. Yeah, the curve, right? The larger time frame curve, exactly. All right, so let's move on to another market. Okay, just a second here. I'll get this up. Yeah. Hoyer is asking a good question here. Why do you short on an uptrend? That is a great question. Hang on one sec. Let me capture this chart for you. There we go. You should be able to see 6 charts of the British pound. Okay. Let me just do that one more time. Why are you short in an uptrend? Well, remember, the word trend in a conventional sense, the way conventional technical analysis looks at and talks about trends, in my opinion, is pretty faulty. In fact, I don't know anybody that makes money doing that, to be honest with you, consistently year after year. What I'm getting at is every uptrend starts at demand, ends at supply. Every downtrend starts at supply, ends at demand. So instead of, if you're going to try to get the low risk, high reward opportunity, you don't want to jump in the middle of that. You want to capture, get in at the beginning and get out hopefully close to the end. Whatever time frame you're looking at. Okay. So as you move higher up on now let's compare what everybody else does to what we're trying to do. As the trend moves higher in that Aussie, for example, okay, more people are going to be looking at that. More invitations are going to go out that are going to cause people to buy into that uptrend, right? Whereas, prices keeps coming up to that larger time frame supply area, that's where prices are going to turn lower. By the time the trend is well underway and obvious, the trend is probably almost over, all right? And the other thing is, the very first thing that I started our session with today was warning you to not just focus on strategy, but think of the logic behind it. There's this massive illusion out there that somehow proper trading is different from how you buy and sell things in other parts of your life, right? In other words, when we go to the shop or the store to buy things, everybody tries to we try to get a good deal. We try not to overpay for things. When we buy a car, we try to get a lower price than what the dealer's offering. When we go to, does anybody ever go to the grocery store and pay more for a food item than what they're selling it for? See what I'm saying? Okay. Yeah, trader, it's recorded. Do you ever think of anything you've ever bought? Do you ever, whatever the asking price is, do you ever tell the seller, you know what, I like this item so much, I want to pay you more for it? See what I'm saying? You would never do that, right? We always try to get lower prices and better deals. Right? So that's exactly the logic you need to use here. If you think about conventional trend analysis, I'm talking about in any book ever written on trading or investing, on technical analysis. If you read the trend information, which is, supposedly the most important part of those books, imagine if you took that action in every other part of your life. You'd be broke, right? You'd have no money. You'd have a lot of friends that love you, and a lot of, the stores would love, they'd give you the red carpet when you walked into the store and everything. People would love you, but you'd have no money. You see what I'm saying? If you constantly just bought after a big rally in price or sold after a big drop in price, you'd be broke. You'd have no money left. So if that logic doesn't work in other parts of your life, don't bring it into the trading world, because you're going to end up transferring your account over to somebody else. That's how all this stuff works, right? Okay. So let's take a look at, first of all, let me bring up the dollar here. We have this chart in the upper left corner. This is the U.S. dollar, okay? So we've got to pay attention to this. Let me capture that one for you. Okay. So what we're looking at here now is the dollar kind of reaching the origin of this drop. Notice I went with the higher part of this portion of this move. Okay. Now it's subtle here, but I don't know why this circle's here. Get rid of it. But notice the gray box that I drew in. I could have drawn it down here, but I didn't. I put it at the top of this rally-based drop, right? Got to be careful. We're not necessarily looking for a drop-based drop, but this rally-based drop. I put it at the top, and this is kind of where prices are stalling out. We put this level in last time we had a session, okay? No, Bill. So we wouldn't, Bill, I see you're 79 and it's 78. No, you wouldn't want to go there. Remember, those are not demand levels that as we define them. So it's not, right? Remember the pattern that we always go over here, and it's in the recordings too. Drop-based rally for demand, rally-based drop for supply. Okay? Okay, so big difference here, and I want to go over that to make sure that you're 100% clear. So here is the drop. Oh wait, let me draw this in, and then I think this will hopefully help you. Let's see. I'm going to clearly show you the difference between what appears to be a demand level that we want to take and one that we definitely want to ignore. All right, so here we go. Take a look at this chart. All right. So this gray box down here at the bottom, hopefully you can see where I'm pointing. This look at the pattern. Drop-based rally. Okay? This level right here with the black lines around it is rally-based rally. Now, the base and the rally here is the same as the base and rally here. But what precedes the base in both of those levels is very different. And it's a key and crucial point. Hear the logic. The rally-based rally, by definition, is always going to be in the middle of a move. Okay? It's always going to be found in the middle of a move. All right? Therefore, the odds are not going to be stacked in your favor. However, focusing on the drop-based rally for demand forces us to trade further out on the curve, where the odds are now stacked in our favor. We're far from equilibrium, out at price levels where, supply and demand are way out of balance. All right? All right? No, Becky, no chart. Let's get back for you. So, while we would probably be taking the drop-based rally as a demand level for entry, most of the time we ignore the rally-based rally for entry. This level's okay for targets and stuff like that. It might be, Bill, but like a level like this probably wouldn't be. I mean, that's such a clear sideways base and rally. You'd have to dive down to a really, really tiny time frame to find something in there. Okay? And at the end of the day, if we try to kind of force that and look for that, you find yourself going to a number of charts just to find kind of what we're looking for, it's probably not a good idea. So, if you stick to the bigger picture drop-based rallies and rally-based drops, that's a huge difference between these middle-of-the-move rally-based rallies and drop-based drops. Okay, big difference there. In fact, in our program, we completely ignore the rally-based rally and drop-based drop for entries. We always trade out at the extremes. Now, is our trade count maybe a little bit less than other people? Possibly. But at the end of the day, not really concerned with that. Okay. All right. So let me get rid of these lines here. I don't want to confuse anybody. And let's take a look at the dollar. Okay. So hopefully that was helpful. Let's take a look. And then we'll get back to the pounds. So again, the dollar's up into this level. It could certainly, we've been kind of chewing away at this for a while. If it goes through it, there's another level above. But in this level or the level above, someone just said they saw the euro take off. Well, again, with the U.S. dollar being up into this supply level on a daily chart, that's when there's, the euro is very vulnerable to a strong move up in price, right? Okay. So, right, when the dollar's into a big supply level here, don't be surprised. The euro's almost always got a little demand. Okay, right there, if not a lot of demand. So don't be surprised when the euro takes off like that. Okay. So not a whole lot to talk about there with the dollar. It's pretty clear what the chart is telling us there. So let's move back to the pound. Okay. So if the dollar continues to fall a little bit, pound's probably going to rally, right? It is rallying. Let's now go down to an hourly chart of the pound, and let's put some. Okay, let's identify some levels. All right, let me capture that for you. Now, I purposely brought up the pound just because this one is kind of sloppy, so we don't want to look for the perfect examples. Let's try to make sense of one here that probably doesn't look that great. Okay. Yeah. So let's start with this hourly chart. Do we have anything up here? So notice we're at levels right now. Let me just kind of draw a circle in. Price has kind of been here before to these levels, so these levels are a little suspect. Again, let me grab this for you. Okay. So we've been here a number of times. And notice the drop from these levels. Now, if you took the first or second pullback into those little areas, you're okay. But now prices are up here again. Should we take this trade again and sell short? Well, the things you want to look at are, number one, how many times have you been up to this level? So we've been here a few times. And more importantly, what's happening when prices drop from this level, these levels? Are they creating big profit margins, or are the declines from these levels becoming more shallow and more shallow? Right? Well, yeah. So you could see, obviously they're becoming more and more shallow. Yeah, Steph, I actually had a trade this morning in the euro, but a similar trade in the pound here. I didn't take it in the pound, but with the dollar being into supply there, Steph, look at each one of these drops. If you take a look at this drop or these drops, they're all right into these pivot lows here, these little low demand levels, right? Okay. All right. So there's plenty. You can see the little demand levels here are working fine. But why were we maybe more interested in demand this morning in the euro and pound? Well, look where the dollar is, right? Okay. I wouldn't want to be shorting these currencies early this morning with the U.S. dollar sitting right into supply. You see what I'm saying? Okay. All right. So anyway, the pound could certainly fall from here, but if we're looking for the higher probability trade, it's probably higher up. So let me just go down to a little bit smaller time frame here. Scrunch the chart up for you, and let me grab it again, and we'll take a look. Try to identify some levels. Okay. So here we go. All right. So where would the next level be above current price, where we might see some demand come in? Okay. And then while people are looking for that, cocoa, I was talking about trend earlier. I don't know if you were here to listen to that, but I would just kind of repeat all that. Again, I'm not interested in joining a trend. Typically, I'm looking to get in at the beginning of the trend, right? And try to get out before the end of the trend. That's when the risk is low and reward is high. All right. And so let's take a look here. But before we go on, I see everybody's prices there. A lot of people 58.50, 60.25. But let me just one more thing here. Thanks for typing those in. Wanted to see what you're looking at there. Nice job. We'll put those levels in a second. But Coco, let me ask you a question. What is the most popular definition of an uptrend out there? What is it? Would you agree that it's higher highs and higher lows? Is that the definition that's in every trading book ever written for the past 100 years? Right? Yeah. Higher highs and higher lows, right? All right. So follow me here. Really follow me, because I think this is a big thing for you. Higher highs and higher lows. So what you and I and everybody are taught is wait until you see higher highs and higher lows in a market and then start buying. But don't buy before that. Right? That's the rule. Every trading book ever written. Okay? But, so given that, if you wait for that picture, what have a group of traders always done before you get into the trade? What has to happen with other traders before you buy? Right? What will always happen? Right? They bought, right? They have to buy first. Okay? How do you create the higher highs and higher lows? People have to come in and buy. And once you see that picture that you're taught to identify, higher highs and higher lows, then you're supposed to buy. So what always has to happen before you buy is a lot of other people have to buy, right? Okay? Pretty simple. Right? Let me ask you this question, Coco. Why is it all that picture of higher highs and higher lows? Those people that always buy to create that, right? Those are the people that have the low risk, really high reward entry, because once you have the higher highs and higher lows, now everybody's going to come in. Everybody's come in and buy, and they're just going to pay them, right? They're going to pay the buyers that took the very low risk entry and high reward entry, right? So, but Coco, one last question to you. Why does that always have to be somebody else? Why can't it be you? Wouldn't you like to be a part of that invitation that goes out to the masses that says, hey guys, come on in and buy. The water's warm, right? Why does it always have to be somebody else? You see what I'm saying? Okay? It doesn't. That's the whole point. Just do what they do. What they do is say, wait a second. How I buy things in every other part of my life, that's exactly how you do it here. Find a sale, buy into the market when prices are on sale, and sell when they're expensive. How does any business make money? They buy at wholesale levels and they sell at retail levels. Okay? Conventional technical analysis, conventional trend analysis teaches you to do the opposite, which is great if you're a trader. But anyway, okay. So I think people are looking at this level here. Now this is not a real clean and clear level here, but I'm going to draw this in. Okay. So the whole point there, Coco, is it doesn't have to be somebody else. It can be you. And that should be, that should be the goal. All right. Yeah, so Peter, if you find a level on a smaller time frame that's on the wrong side of the curve, if you just go up a few time frames, it's probably not a good idea, right? Now, one thing though, you don't have to find, if you find a 60-minute demand level, it doesn't have to be at a daily demand level. Just make sure it's not anywhere near that daily supply level. In other words, you want to make sure that you can, you lock in a nice profit margin, right? So there's a level right there. And then, of course, we have, if I take the top of this area, we kind of have this rally-based drop up here. Again, these are more sloppy type levels. Okay. So I'm going to draw in two little areas here. And there you go. Okay. All right. So there are some levels in the British pound. Okay. Now that bottom one, look at how prices collapsed out of that level. That's really, really nice. The only problem with, one of the reasons why I'm kind of going so high there looking for supply levels is if you go to, I'm going to take you here in just a second. And I'm just going to kind of draw on the origin of some turning points in here. Okay. If you go to the much larger time frame, again, I'm just doing this real quick. Hang on just a second. Right Right there. Okay. So there's the monthly chart. Okay. So again, just got to be careful. So unlike the Aussie dollar, hopefully you can see this monthly chart of the pound. Unlike the Aussie dollar, this one is not out at an extreme, right? There's still some big picture room below, and there's plenty of big picture room above. Okay. Of course, there are tons of levels in there, in between. But the whole point is, where are we in the big picture? In the Aussie, we were clearly near the big supply level. In this pound, we're not. Okay. So there's room to drop. Again, if we were right on top of that larger time frame demand, probably wouldn't be looking for supply levels. Okay. But we've got quite a ways to go. All right. And so let's take a look at another chart here. Hang on a second, I'll have it up for you. So there's the daily of the pound. Okay. Yeah, I do see. Let's see. I missed a question there, but I see it. So about how do you identify heavy selling within a candle? What you want to look for there. Yeah. So what you want to look for there is, again, it's more important to look at how prices left an area. Okay. Did they leave an area in dramatic fashion, and did they move far away from that area? Okay, that is the key to telling you that there's a big supply and demand imbalance at the origin of that move. And because prices hopefully have moved far away from that level as well, not just strength, but how far, that tells you, that you're probably well positioned on the larger time frame curve. Okay. Okay. All right. Yeah, and where prices go, that's a good question, SW. Remember, something we talk about often here at FX Street is these levels are magnets, right? These levels are magnets for prices to go to. Now, why is that, right? Who has all their demand and supply there, right? The big institutions, the banks, the people that are consistently profitable. So prices have to go to those levels, or else their orders aren't going to get filled. And I lived that game for a long time. We would have huge orders at the trade desk from some of the biggest, banks out there and institutions out there. But the problem was the orders were too big. Prices, it was hard to keep price at those levels because we had, for example, we would have so much to buy that there just wouldn't be enough sellers there. So, our job was kind of to work that market and do what we could to, help price get back down to that area, so that we could be buyers there, right? Does that, you understand that? Okay. Okay. So, yeah, and to kind of just, complete that answer, there's another thing we've talked about quite a bit here, and what I'm going to say now, I don't think we've ever, I can't remember a time where we've been wrong with this, but identifying the path of least resistance. Remember how we did that in the dollar all of pretty much last year? We would just look at the chart, we'd say, okay, where's the path of least resistance? Is it up or down? And whichever way had that path of least resistance, ultimately that's where price went. And that's what almost always happens. Okay? All right. So identify that path of least resistance until your next area of demand or supply. All right. So here is that euro. And again, if you keep it really simple, we've got this kind of big area below. I'm sorry, this is the pound. Get that in, and then the thing with the pound is, okay. Now, so we've got these big levels above and below. Price is currently right in the middle of that. Okay. You've got, yeah, the 160. Yeah, it's I think you meant to say base drop there, right, Bill? Yeah. So we would look to go with the level just above that. Okay. And the beauty of doing that, Bill, if you go with the level just above that level that you're identifying at 160, prices are probably still out there for a bit. But the presence of that level at 160 makes the level above that much better, because now it's because of 160 that little area, it's going to take a lot more buying to get through that, which ultimately is likely to happen. But that just means that you reach the upper level with much fewer buyers on board. Does that make sense? Because you have to use a lot of those buy bullets at 160. So that makes the short just above there really ideal. And that's what traps a lot of people. You know, 'cause people will try to sell at 160, and then that level won't work out. It's a drop-based drop. And then they'll go up to the next level and they'll say, well, I'm not going to try this again. And boom, that's where prices fall. So, okay. I just typed my email address into the chat here, sseiden@tradingacademy.com. I know we're kind of out of time here. We usually end about 5 minutes till for the next speaker. But I wanted to thank you for today. Hopefully this was helpful. We try to go above and beyond with the information. It's a tricky little path, but hopefully it was helpful. If you have any questions, certainly send me an email. You can send a chart or two if you like. I'm pretty caught up on emails. So have a great day, everybody.